Welcome to our deep dive, into Morgan Housel's book, The Psychology of Money.
Oh, yeah.
In this deep dive, we're going to be unpacking 20 short chapters, all exploring this fascinating world
Yeah.
of personal
It's
finance
a good one.
and how it intersects with psychology, history, and even luck.
Well, and what I really like about this book is how Housel debunks this idea that there's like one right way to think about money.
Right.
He shows how these personal experiences that we all have from childhood to major economic events, like really shape our financial decisions.
Yeah, and that's so true. Like, I was struck by the example of people buying lottery tickets.
Oh, yeah.
Even when they're struggling financially.
Yeah.
And Housel suggests that this isn't just like irrational behavior, but often a reflection of their circumstances
Totally.
and a deep desire for a better life.
Yeah, their logic makes sense. When you look at it within their context,
Right.
it's powerful.
And it's like you said, it makes
Yeah.
you think instead of judging. We need to understand the context behind people's choices.
And on a personal level, even think about how your own experiences
Yeah,
might be shaping your money mindset.
totally. And recognizing those influences
Yeah.
can be a total game changer
Sure.
for making, more intentional decisions.
For sure.
For sure. Speaking of game changers,
Yeah.
Housel's chapter on Nothing's Free really resonated with me.
Yes.
It really emphasizes that every financial decision
Yeah.
comes with trade-offs.
He uses a really great story in there about Jesse Livermore,
Oh, yeah.
who was this like legendary trader who made and lost a fortune.
Yeah.
And Livermore said, overconfidence
Wow.
is an expensive disease that contributed to his downfall.
It's a stark reminder that financial success can come with hidden costs,
Right.
like stress and instability.
Eat time.
It's almost like this question for all of us.
Yeah.
What are we willing to sacrifice, time, energy, even peace of mind, in
Yeah.
pursuit of those financial goals?
Totally. And what are like the non-financial rewards we truly value?
Right.
This helps us figure out what truly matters and make sure that our financial decisions align with those values.
That's a great point.
Yeah.
And then Housel dives into this idea of the seduction of pessimism,
Oh, yeah.
exploring why negative financial news
Yeah.
tends to grab our attention more than the positive stories.
Right. Well, it boils down to, I think, two main factors.
Okay.
Negativity bias,
Okay.
which is like an evolutionary trait
Interesting.
that makes us focus on threats, right?
Right.
And the media's tendency to highlight like dramatic pessimistic predictions.
Like that 2008 article
Hello.
predicting the collapse of the U.S. dollar.
Oh, yeah, that got a ton of
A
attention.
ton of attention.
And then you've got like less dramatic stories like Japan's economic recovery after World War II.
Right.
Those didn't get nearly as much buzz.
So what's the takeaway there?
Well, Housel's point is that this constant barrage of negativity can make us overlook positive trends. And then we end up making like fear-based decisions that hurt us in the long run.
So how do we counteract that?
That's a great question.
Yeah.
I think actively seeking out positive financial news
Okay.
and focusing on long-term trends can really help.
That's great advice.
Thanks.
It's like training your brain to focus on the potential for growth rather than just getting bogged down by those doom and gloom predictions.
Exactly.
Okay, so this next chapter, when you'll believe anything,
Ooh, yeah.
it gets a little scary
A little scary.
because it explores how these high stakes, combined with limited information, can make people believe anything, especially if it promises wealth.
It's so true.
Think about the dot-com bubble
Oh, yeah.
or Bernie Madoff's Ponzi scheme.
Crazy.
Even sophisticated investors fell prey to these narratives that were too good to be true.
Right. Well, this really highlights the danger of wishful thinking in finance.
Right.
We might ignore red flags.
Yeah.
Or like even rational arguments if the potential payoff is big enough.
Oh, for sure.
So Housel challenges us to develop like critical thinking skills to protect ourselves
Right.
from falling for those traps.
Which is so important, especially with the rise of financial influencers.
Oh my gosh, yeah.
And get-rich-quick schemes.
Absolutely.
Speaking of needing a good guide,
Yeah.
Housel shares this rather bizarre story
Okay.
about Clarence Hughes, who went to the dentist in 1931
Oh,
and ended up having 16 teeth pulled
wow.
and his tonsils removed
Oh my gosh.
without his consent.
It's awful.
So as crazy as that sounds, it highlights how medical practices used to be very paternalistic.
Right. The doctor thought they knew best.
Yeah.
Even without patient input.
It's incredible how much that's changed.
I know, it's amazing.
Today, we expect doctors to involve us in decisions and respect our autonomy.
Right.
And Housel draws this really interesting parallel to the financial world.
Oh, yeah.
Just like medical treatment, there's no one-size-fits-all financial advice.
So true.
What works for one person
Right.
might be disastrous for another. So finding an advisor who truly understands your goals and values is just as crucial as finding a doctor who listens to your needs.
100%.
Now, in a moment of vulnerability, Housel actually shares his own approach to money in a chapter aptly titled Confessions.
I love that chapter.
Yeah.
What's refreshing is that he's not preaching from some ivory tower.
Right.
He admits that his own journey has had its ups and downs.
So what is his secret sauce?
Yeah.
What are those principles that he actually lives by?
Well, his philosophy is all about simplicity and sustainability.
Okay.
He focuses on living below his means,
Okay.
prioritizing savings, and being prepared for unexpected expenses.
I love that.
Yeah.
It's such a good reminder that financial well-being isn't always about complex investment strategies or
Yeah.
chasing the latest trends.
It's not about getting fancy.
Right.
Sometimes the most effective approach is also the most straightforward.
Absolutely.
Yeah, it's about building that solid foundation rather than constantly seeking, like, the next big win.
Yeah, and this ties into another key theme that he explores the impact of history
Oh, yeah.
on our financial decisions.
Big time.
The postscript section was a real eye-opener.
Totally.
It traces these economic and cultural shifts in the U.S. from the post-war boom to the rise of consumerism and growing income inequality.
Yeah, he argues that those decades after World War II really created this culture of debt acceptance
Yeah.
and lifestyle expectations that can be hard to shake off.
And it makes it so challenging to align our choices with today's realities.
For sure.
It's fascinating to think about how much of our spending behavior is influenced by those historical narratives.
Totally.
Are we buying things because we truly need them, or because we've been conditioned to believe that certain purchases signify success
It's a great question.
or belonging?
Yeah, it's definitely something to reflect on.
So let's dive into some of the specific concepts that Housel unpacks.
Okay, love it.
He starts with this idea that nothing's free in finance,
Right.
emphasizing that every decision has a cost, even if it's not immediately obvious.
Yeah, he uses the example of buying a fancy car.
Okay.
Sure, it might be impressive, but you're also paying a price in terms of maintenance insurance and even the risk of depreciation.
Right.
So it's a reminder to be aware of both the visible and hidden costs associated with our choices.
Right. Are we able to afford something in the short term, but can we truly afford its long-term impact
Exactly.
on our financial well-being?
100%.
So this brings to mind another powerful concept.
Yeah.
Wealth is what you don't see.
Yes.
So House challenges this common misconception that equates wealth with material possessions.
Yeah.
True wealth, he argues, is the money you haven't spent,
Right.
the experiences you've chosen to delay,
Yes.
the temptations you've resisted.
I love that.
It's such a fascinating shift in perspective.
It is.
It's about valuing financial freedom and options over that immediate gratification.
He even makes a bold statement. Saving money is more important than investing.
Wait, really?
Yeah.
That seems kind of counterintuitive in a book about finance.
I know.
Right? So what's his logic there?
Well, his logic is that you can't invest what you haven't saved.
Yeah, okay.
Building a solid savings habit is the foundation.
So it's step one.
Yeah. And he emphasizes that, like, most of us have more control over our savings rate than we do over investment returns.
That's true.
Right.
We can choose to spend less. We can automate our savings
Oh, wow.
and prioritize that long-term financial security
Yep.
over instant gratification.
That's it.
So then he gets into this idea of the power of compounding,
Oh, yeah, it's like magic.
which he compares to the formation of ice ages,
Yeah.
where small changes over time
Right.
lead to massive effects.
It's so powerful.
He really emphasizes the importance of consistency and time, right?
He does.
It's not about finding that hot stock,
Right.
but about steadily investing over the long haul.
Like slow and steady wins the race.
Yeah, he uses Warren Buffett as a prime example.
Of course.
Buffett's wealth isn't solely due to being a brilliant investor,
Right.
but to his decades of disciplined, consistent investing.
Yeah. He started young and let compounding work its magic.
It's inspiring and almost unbelievable
I know.
to see how small, consistent investments can
Yeah.
grow exponentially over time.
Now, this is where Housel gets into like a trap that I think a lot of us fall into.
Okay.
The historians as prophet's fallacy.
Okay, so what is that?
So it's that temptation to think that we can predict the future
Okay,
based on the past,
got it.
especially when it comes to financial markets.
So looking in the rearview mirror
Exactly.
to try to see what's ahead.
Yeah. And Housel cautions against this.
Okay.
He argues that major economic shifts like the rise of the 401k, the gig economy, globalization.
Right.
All of these things have fundamentally changed the financial landscape.
So what worked in the past might not be relevant now.
Totally.
Right.
And plus, he reminds us that the most significant events in history,
Yeah.
wars, technological breakthroughs, pandemics,
Okay.
those are almost impossible to predict.
Yeah. You can't see those coming.
No.
Mm.
And we can't base our financial decisions on the assumption that we can foresee these events.
It's a good reminder to be humble
It is.
and recognize that despite our best efforts,
Right.
there are these elements of chance and uncertainty that we
Yeah.
can't control.
Totally. And that brings us to like a really crucial concept.
Okay.
Room for error.
Okay.
So Housel really emphasizes building a buffer
Okay.
into our financial plans for like unexpected events, market fluctuations, and even our own mistakes.
It's like having that financial cushion to absorb life's inevitable shocks.
Exact. Think of like a professional card counter.
Okay.
Even with a statistical edge, they keep a reserve of cash
Right.
to withstand like swings of bad luck.
That's a great analogy
Right.
because it highlights the importance of not betting everything on a single outcome,
Yes.
no matter how confident we feel.
100%.
And this ties back into that concept of survival being the ultimate goal.
Right.
It's not always about maximizing returns.
It's not.
But about staying in the game long enough to let compounding work its magic.
Like Warren Buffett.
Right.
His success isn't just about his stock picks, but his ability to avoid catastrophic losses and stay disciplined over decades.
For sure. Now, to make this even more relatable,
Yeah.
Housel shares these personal anecdotes
Yeah.
about his own financial journey.
I love that he doesn't shy away from admitting his mistakes.
Me too. It makes the advice feel more genuine.
Totally. He talks about how he got caught up in chasing hot stocks early in his career.
Yeah.
It's such a classic mistake.
It is, and it's comforting to know that even someone who dedicates their life to finance
Yeah.
isn't immune to those pitfalls.
Right. Well, his point is that we're all human.
Right.
We make mistakes. The key is to learn from them and develop strategies to avoid repeating them.
Absolutely. And he really stresses aligning our financial decisions
Yeah.
with our values and goals.
Huge.
So what about his personal approach to money?
Well, he and his wife established a comfortable and sustainable lifestyle early on, and they've stuck with it even as their income has grown.
Wow.
It's a reminder that financial success isn't just about accumulating wealth, but about creating a life that feels meaningful and fulfilling.
This next idea is so relatable, this concept of people playing a different game.
Oh, yeah?
So he uses the example of day traders
Right.
who operate on a completely different time horizon and risk tolerance
Totally.
than someone investing for retirement.
For sure.
So if we get caught up in their game-chasing short-term gains,
Right.
we could end up making decisions that jeopardize our long-term goals.
Big time.
So it's a great reminder to stay focused on our own lane
Yeah.
and not get distracted by what others are doing.
Don't compare yourself.
Right, and he extends this idea to spending habits as well.
Oh, yeah.
You know, we might compare ourselves to people driving fancy cars or living in luxurious homes
Right.
and feel pressured to keep up,
Totally.
even if it doesn't align with our own financial reality.
Yeah, it's so easy to get caught up in that comparison game.
It is, especially with social media, constantly showcasing these seemingly perfect lives.
Uh,
So what's the antidote to that?
Well, Housel really urges us to define what enough means for ourselves
Okay.
and make financial decisions based on our own values and goals, not on the desire to impress others.
That's a good one.
Yeah.
This next story is a real cautionary tale.
Okay.
Housel tells us about Rajat Gupta, this successful businessman
Oh, yeah.
who threw away his career and reputation by engaging in insider trading.
Wow, that's a powerful reminder that greed
Yeah.
can lead even the most intelligent and accomplished people down a dangerous path.
It really is, and it's also a testament to fragility of success,
Right.
regardless of how secure it might seem.
It can all disappear so quickly.
Yeah, so how do we prevent that?
Well, Housel uses this story to prompt us to define what enough means to us.
That's a good one.
Yeah, at what point do we have enough money, success, or possessions to feel content?
Because that pursuit of more can be endless
It is.
and ultimately unsatisfying. So what's the alternative?
Well, Housel suggests that the ultimate form of wealth is the ability to wake up each morning and say, I could do whatever I want today.
Wow.
Yeah,
Which highlights the power of freedom and flexibility.
that's what it's all about.
That's such an inspiring way to think about wealth.
It is.
It's not about the number in your bank account, but the quality of your life and the choices you're able to make.
100%.
Now, this next point might surprise you.
Okay, I'm intrigued.
Housel argues that we're not spreadsheets. We're emotional beings.
Oh, I love that.
Our emotions play a huge role in our financial decisions.
Really?
Even if we try to deny it.
We do. We try to be so rational,
Yeah.
but we're not.
He uses this fascinating example. Harry Markowitz,
Okay.
the Nobel Prize-winning economist,
Yeah.
who invented modern portfolio theory.
Right.
But guess what?
What?
When it came to his own retirement savings,
Okay.
he didn't follow his own complex formulas.
Oh, he didn't?
He didn't.
That's so interesting. What did he do?
He chose a simple 50-50 split between stocks and bonds
Wow.
because it felt emotionally comfortable.
That's amazing. Even a genius like Markowitz recognized the importance of factoring emotions into financial planning.
Right. It reinforces Housel's point that acknowledging our emotions,
Yes.
rather than trying to ignore them,
Right.
can lead to better financial decisions.
It's so true.
So this leads to another key takeaway. Our personal experiences shape our financial decisions in profound ways.
Oh, yeah.
Housel shares this story about a friend who grew up in poverty
Okay.
and is now terrified of debt even though he's financially secure.
It's a powerful example of how our past experiences, especially those related to money, can leave a lasting impact.
Totally. They can influence our risk tolerance,
Yes.
spending habits,
Yep.
our entire approach to finance.
You get
It makes you realize how important it is to be aware of those influences,
right.
both conscious and unconscious,
Totally.
so we can make more informed choices.
For sure.
Now, this next concept is particularly relevant in today's rapidly changing world.
The value of flexibility.
Yes.
In a world where job security is less certain
Right.
and opportunities can rise unexpectedly.
Yeah,
Being adaptable is key.
totally. So Housel suggests that saving money and building financial independence
That's right.
provide that flexibility.
Right. It gives you the freedom to change careers, start a business, take time off to care for loved ones,
Yeah.
or pursue opportunities you might not have considered otherwise.
You have more options.
Yeah, it's about having a cushion
Yeah,
to weather life's ups and downs
exactly.
without feeling trapped or forced into decisions out of desperation.
He goes as far as to say that flexibility might be the new form of intelligence.
I love that.
Right.
It's about being able to adapt and pivot when circumstances change.
Now, here's a concept that might challenge some conventional wisdom.
Okay, hit me.
The tyranny of the minority in financial advice.
Okay, so unpack that one for me.
So Housel argues that the most vocal and visible people in the financial world
Yeah.
often represent a small,
And often extreme
Oh.
segment of the population.
like those obsessed with maximizing returns,
Idly.
taking on huge risks,
Yeah.
or constantly chasing that next hot investment.
Yes. And their strategies might not be suitable or even desirable
Right.
for most people
Yeah.
who simply want to build a secure and fulfilling life.
It's so easy to get caught up in those narratives.
I know.
Especially when they're constantly being amplified in the media.
Everywhere you look.
So how do we tune out that noise?
Well, Housel encourages us to find voices that resonate with our own values
Okay.
and to develop a financial strategy that feels right for us,
Right.
even if it goes against conventional wisdom.
Which is so empowering.
It is.
Because it reminds us that there's no one right way to approach finance.
Right.
The key is finding what works best
Totally.
for our individual circumstances and goals.
Now let's shift gears
Okay.
and explore one of the most impactful sections of the book.
Oh.
Housel's analysis of the economic and cultural shifts that have occurred in the U.S.
Yep.
since 1945.
Yeah, it was fascinating to see how he traces that trajectory from the post-war boom, a time of unprecedented growth and prosperity,
Right.
to the present day where income inequality
Yeah.
and the normalization of debt are major challenges.
He argues that the expectations and assumptions about money formed during that post-war era
Yeah.
can be hard to shake, even though the economic realities have shifted significantly.
It's like we're still clinging to the idea of a broad middle class
Right.
and this belief that hard work automatically leads to financial security,
Yeah.
even though the data suggests otherwise.
So he challenges us to confront those outdated narratives
Right.
and to develop a more nuanced understanding of the complexities of the 21st century economy.
It's a call to be realistic.
Yeah.
And adapt our financial strategies to the current landscape.
100% now in our age of social media and instant gratification.
Oh, yeah.
This next concept is particularly relevant, the difference between being rich and being wealthy.
Right. Those terms are often used interchangeably.
Yeah, they are.
But Housel makes this really clear distinction.
So being rich
Okay.
is about having a lot of money to spend.
Okay.
It's about the flashy cars and designer clothes and luxurious vacations.
Got it.
But being wealthy
Yeah.
is about something entirely different.
Okay, so what is it?
It's about financial security, having options and control over your time.
It's about having true freedom and agency in your life.
Exactly.
So true wealth is often hidden.
It is.
It's the money you haven't spent, the temptations you've resisted, the investments you've made in your future.
I love that.
It's about playing the long game
Yeah.
and prioritizing financial stability over those fleeting displays of wealth.
He encourages us to shift our focus from outward appearances to building genuine financial independence and a life that aligns with our values.
Now let's talk about something that's often overlooked in discussions of personal finance, the non-financial rewards of wealth.
That's huge.
So Housel argues that one of the greatest benefits of financial security
Yeah.
is the ability to gain control over your time.
Oh, that's so true.
It's about having that freedom to choose how you spend your days,
Right.
to pursue your passions, to be present with your loved ones,
Mhm.
and to avoid like that soul-crushing grind
Ugh, I know.
of a job you hate.
Yeah, he highlights how not having control over your time
Right.
can significantly impact happiness and fulfillment.
Yeah, it's such a reminder that financial well-being
Yeah.
isn't just about a number in your bank account. It's about the quality of your life and the ability to create a schedule that aligns with your priorities.
100%.
Yeah.
So while financial returns are easily quantifiable,
Yeah.
the emotional and psychological benefits of freedom and flexibility are harder to measure,
Yeah.
but equally, if not more valuable.
Right. So this next concept really resonated with me.
Okay.
The power of saying no. Housel argues that one of the key skills in building wealth is this ability to delay gratification
Right.
and resist spending money on things you don't truly need.
He uses the example of professional athletes
Okay.
who, despite earning massive salaries, often end up bankrupt
Wow.
because they haven't developed the discipline to manage their money wisely.
It's a stark reminder that income isn't everything.
Right.
Your financial well-being depends on your ability to control your spending
Yes.
and make those conscious choices about how you use your money.
He suggests that enough.
Okay.
Isn't something you stumble upon, it's something you actively create.
Oh, that's interesting.
Yeah.
So it's about defining your values, setting boundaries,
Yes.
and making intentional choices
It's power.
about how you want to live.
It is.
That's a powerful perspective shift.
It is.
Instead of constantly chasing more,
Yeah.
we can choose to find contentment in what we already have.
And this ties into this idea that financial security isn't just about preparing for retirement.
Right.
It's about creating a life that feels rich and meaningful at every stage.
I love that. It seems like a constant balancing act, enjoying life today while also planning for the future.
Speaking of balance, Housel delves into a concept that's fundamental to finance risk. Oh, yeah. And he makes a really important distinction between like two types of risk.
Okay, lay it on me.
Okay, so the first one is the kind of risk necessary for growth.
Okay.
Like think about investing in the stock market, starting a business, or even just changing careers.
Right.
Like without taking those calculated risks,
Yeah.
we'd never achieve anything significant.
It's about stepping outside of your comfort zone and embracing the potential for both rewards and setbacks.
Exactly. But then there's this second type of risk that kind of can be catastrophic.
Okay, what's that?
Taking on excessive debt, investing in highly speculative assets, or failing to diversify your portfolio.
Those can be big mistakes.
That can lead to financial ruin.
So it's about recognizing the difference between those calculated risks that propel us forward and those reckless risks that could derail us completely.
You got it.
So find that sweet spot between boldness and caution.
Exactly. And that's where the concept of room for error comes in again.
Okay, right?
It's about having a margin of safety in your financial plan so that even if things don't go perfectly, you're not wiped out.
You've got that cushion
Exactly.
to protect you.
Now let's get into something that can be a bit unsettling, to think about the role of luck in finance.
Oh, yeah. Luck isn't financial success all about hard work and making smart decisions.
I mean, those things are definitely important.
Right.
But Housel argues that we often underestimate the influence of luck, both good and bad.
Okay, I'm listening.
So he uses the example of Bill Gates.
Okay, one of the richest people on the planet.
Right. So yes, Gates is brilliant and driven,
For sure.
but he also benefited from a series of fortunate events, like from attending a wealthy high school with access to a computer, to being born at the right time,
Yeah.
to capitalize on the rise of personal computers.
Okay, so luck played a pretty big role in his success.
Yeah. A significant role.
It makes you wonder how many other talented people are out there
Absolutely.
who just never got those lucky breaks.
And on the flip side, he tells the story of Kent Evans,
Oh, yeah.
Gates' best friend and equally gifted classmate, who tragically died in a mountain climbing accident before he could reach his full potential.
Wow. So it's a reminder that even with hard work and good intentions, sometimes life throws you a curveball that you can't control.
It really
So
is.
what's the lesson there?
Well, Housel's point is that while we should strive to make smart financial decisions,
Right.
we also need to acknowledge that chance plays a role.
Right.
We need to be humble enough to recognize that our successes are often due to factors beyond our control.
It's a humbling perspective.
It is.
It reminds us to be grateful for what we have and to be more compassionate towards those who are struggling.
Absolutely. So as we wrap up this deep dive into the psychology of money, what are some key takeaways? What does Housel want us to remember?
For me, it's that financial success isn't just about being good with numbers. It's about understanding our own psychology, our biases, our fears, and our aspirations.
Right.
It's about aligning our financial decisions with our values and creating a life that feels authentic and meaningful.
He also emphasizes the importance of long-term thinking, understanding the power of compounding and being patient.
And the fact that there's no one-size-fits-all approach to finance.
Right.
What works for one person might not work for another.
For sure.
It's crucial to find a strategy that feels right for you, both financially and emotionally.
He encourages us to save more than we think we need, to be prepared for unexpected events, and to build in that margin of safety.
And maybe most importantly, he reminds us that financial security isn't just about accumulating wealth, but about having options, flexibility, and control over our time.
Yes, it's about creating a life where we're free to pursue what truly matters to us.
So, as we conclude this exploration of the psychology of money, here's a final thought to ponder. How can understanding the historical forces that have shaped our financial system and our collective psychology empower us to make more informed and aligned choices about money today?
That's a powerful question, and one that can guide us as we navigate the complexities of the financial world and strive to create a life of purpose and fulfillment. For those looking to delve deeper into these ideas, we highly recommend checking out The Psychology of Money by Morgan Housel.